Your student loans are going to last you 40 years.
40 years?
40 years, correct. Because if you make minimum payments on your student loans, they are negatively amortized for the first 5 years, and you're piling more interest on the principal and interest. So they're structured and designed to last you 40 years. That means a 22-year-old coming out of college is going to be paying on their student loans all the way into their retirement. Is that shocking, Troy?
That is crazy. A lot of people don't even think about that.
No, they don't. What they don't really know is there something you can do about it? Through Equity XL, we can show somebody how to take all those student loans along with all their other debt, their consumer debts, their credit cards, their auto loans, even their mortgage, and be debt-free as little as 5 to 7 years without spending any more to do it.
But Paul, a lot of people are taught that they need to do a debt consolidation, and that's the right thing to do.
Well, and they're tempted to do that because they're usually offered a lower interest rate. The other thing that's shocking is the average Stafford loan that carries 6.8% interest, the effective interest making minimum payments is closer to 65 to 80%, okay? And debt consolidation is the sworn enemy of debt elimination. You lose the snowballing effect and the ability to roll that freed up cash flow up and to accelerate the debt payoff. Give us a call at Gordon Marketing if you want to learn more. This is a red hot market right now. The federal government has just mandated through the Department of Education that all student loans that have been in forbearance and suspension begin payment immediately as of yesterday.
May 5th, or it's not Cinco de Mayo, it's Cinco de Payo?
Cinco de Payo, that's correct. So give us a call if you like more helpful hints as an advisor. Subscribe to the Selling Life and Annuities channel. I'll be glad to get back to you as soon as possible. Thanks.